Centralized exchanges have recently experienced a massive exodus of SHIB tokens, with over 500 billion SHIB moving off exchanges into private wallets. This sudden shift has raised questions about investor sentiment and the future trajectory of Shiba Inu. The movement suggests a change in strategy, with traders opting to store their tokens more securely or hold them for the long term. Blockchain data reveals a clear trend. More SHIB is now sitting in private storage than on exchanges. Exchange reserves have dropped to about 81.2 trillion SHIB. Significant decline. This means fewer SHIB tokens are available for immediate trading, which could reduce short-term volatility. The outflow has exceeded 430 billion SHIB, and the drop in exchange reserves is now at a 0.5% decrease. This kind of movement is typically associated with whale activity, large holders consolidating their positions or preparing for a long-term hold. The decline in exchange reserves contradicts earlier predictions that rising reserves would lead to a sell-off. Instead, the opposite is happening. SHIB is leaving exchanges at a faster rate than coming in. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. This indicates a shift in investor behavior. Rather than preparing for a sell-off, investors are locking up their tokens, possibly in anticipation of future value appreciation or simply to secure them against potential market instability. At the same time, the SHIB network is seeing an uptick in active users. This is an interesting contrast to the cautious market environment. Despite the broader crypto market's uncertainty, the Shiba Inu ecosystem is still engaging its community. This could be a sign of resilience or a growing interest in SHIB. As a long-term asset, technical indicators suggest that SHIB has been trading below its key moving averages for the past year. This pattern is typically seen as bearish, but it doesn't necessarily mean a crash is imminent. The recent outflows could be a sign of a bottoming process, where large holders are positioning themselves ahead of a potential rebound. One of the most important questions is whether this exodus will continue. If the trend persists, it could signal a broader shift in market sentiment. On the other hand, if the outflow slows or reverses, it could indicate renewed selling pressure or a return to speculative trading. Another key factor is the behavior of large holders. If whales continue to move SHIB off exchanges, it could reduce the token's liquidity and increase its price volatility. But if they begin to bring SHIB back onto exchanges, it could signal a readiness to sell or trade again. The next signal to watch is the movement of SHIB on-chain. If the outflow continues and the number of active wallets, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Grows, it could be a sign of a bullish shift. Conversely, if inflows begin to pick up and exchange reserves stabilize or rise, it could indicate a return to market activity and potential selling pressure. The SHIB token movement is a clear indicator of changing behavior in the crypto market. Whether this is a temporary shift or a long-term trend remains to be seen. What's clear is that investors are adapting to the current market conditions, and the SHIB token is a key player in this evolving landscape.